Oh boy, here we go again. Back to work tonight. CPI coming in hot tomorrow. What a fantastic day today, right? Got that beautiful bull trap that we talked about in last night's video. And man, the buyers are in the perfect spot right now for a beautiful reversal back up into weekly ranges. You know, the question though is, here's the big question. You know I'm going to say, nobody knows what the CPI will do to these markets tomorrow. Not to worry though. I'm going to give you guys an easy game plan that way you're ready to cover no matter what the CPI report does tomorrow. I've got some great trades I'm tracking for Wednesday. And of course, as always, I'm going to cover my favorite trades in the video here tonight that you get a game plan to make some money no matter what happens on CPI inflation Wednesday. Now, before we jump in and talk details of these trades tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. If you like these lessons, if you enjoy these videos, do me a favor here tonight, will you? Hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Either way, thank you so much for tuning in, supporting the channel. But enough of the intro. I'm getting excited, getting goosebumps just thinking about tomorrow, CPI Wednesday. Now, where are the best trades setting up for CPI Wednesday? Well, let's start first tonight on the 60-minute time frame. Remember, I like to use the 60-minute charts to help me plan my trades on the Emini and the NASDAQ for the following day. Later on in the video tonight, we'll drill down and use some faster tick charts. Tick charts help us plan the perfect entries for tomorrow in our trade room. So we're going to cover all the bases here on the video. What are the 60-minute time frames telling us right now? Well, not a lot has changed from yesterday. We're still bullish overall into trading ranges, We're still looking for those buyers to make their run back up into those trading ranges. But again, the big variable right now is that CPI report. It is completely reasonable to think these bears may get a shot back down to take out the monthly lows, and I want to make sure we have a game plan for that. Bottom line is, we're going to go over some game plans tonight. If it rips higher, we get a game plan for that. If it drops back to monthly lows, get a game plan for that as well. Days like today, it's all about making sure we're ready for no matter what the market throws at us. And you guys have a roadmap by the time we're done here in the video here tonight. Now, before we jump into the tick charts and go over my favorite ways to make money on these markets here for tomorrow, let's all get on the same page for tomorrow, because unless you've been living under a rock the last few weeks, everyone is waiting on that CPI report coming out tomorrow morning at 8:30 Eastern time. We have a very important FOMC announcement next Wednesday afternoon, and we know that CPI report will be a big impact player on whether or not the Fed, the FOMC, will raise rates, right, or pause here next week. So that is our big news on our radar for tomorrow. Keep in mind, things might be a bit slow overnight. Remember, trading is like riding a bicycle. It's easier when it's moving, so don't force trades overnight. And usually on CPI, we're going to get some pretty wild reaction to it, so don't force trades too quickly after that CPI report comes out by about 8:45, 9 o'clock Eastern time. Let the things calm down, let the dust settle, and we'll get after it tomorrow morning in our trade room. So keep an eye. Again, be careful overnight, forcing trades overnight, and be careful around the volatility that comes in 8:45, 9 o'clock into the opening bell tomorrow. Be looking for our first trades of the session. Now, back to our charts. The money is made on the charts, right? Now let's go over my favorite trades here on the S&P and the SPY first, and we'll wrap tonight up on the NASDAQ and the QQQs. As I mentioned in the introduction, there really is one key component right now. We're bullish into a trading range. In last night's video, we talked about how when markets begin to grind up like this, remember they're trying to go back up into that range again. When they grind up like this, we talked about this, we're looking to get below prior swings. That's why I said earlier, this is the primo area. Buyers are just teed up right now for a nice reversal, a bear trap reversal. If you're a student of mine, if you've taken my free trading classes, you know this is a beautiful bear trap area. We're also right underneath Monday's lows. We'll talk about why that's important. Again, the only question right now is how will the CPI affect us? No one should be surprised if we make a run down to take out that low and then get that bounce, and I definitely want to make sure we're ready for that. But a lot of long side trades on our radar for today. Got a couple short side trades as well as we buckle up ahead of that CPI number. Knowing what the bigger picture tells us right now, let's now drill down into our tick charts. Tick charts, in my opinion, make everything easier. This is a 7,000 tick chart, and this is the 21 EMA. If you're watching here for the first time right now, there are three really important aspects or fundamentals or giveaways on this chart right now. The first one is this bullish trading range. There's not a lot different from last night's video. We know that ranges are magnets. We know that ranges love to rotate back and forth, right? If you watched last night's video, this is a recap. We talked about last night. And so buyers been buying low. And again, you can see we're down around the lows of that trading range. Seems to be a great spot here for buyers to want that reversal. One more thing very interesting here right now is we're back to Monday's low. Now, why is that important? Well, you might have noticed that on Sunday night, right? Monday's low, Monday's low, the market ripped higher. And oftentimes what happens, especially during kind of a low volume Sunday night like it was this week, oftentimes, when you get these big rips in the pre-market Sunday night, by the time everybody comes in on Monday morning, they're like, what the heck, right? We're not going to buy way up here. And oftentimes, the market has to go all the way back to where it came from, almost as if to start the week over again. This is a much more attractive area now for buyers to get back in. Easy spot right now to think buyers would love to reload the boat here now and finally take out that big high they've been trying to get to here all week. The big challenge we have right now is the strength of that move going lower. You know, all signs point to buy this, right? All signs point to buy right now. The only challenge is, the third clue, is the strength of that move lower. Anytime, this is the strongest move down we've seen all week. Anytime we see a strong move down, we have to anticipate a pullback and a retest of that low. So knowing that we're in a great place to be buying. We're underneath a trading range. We're right back to Monday's or Sunday night's lows. But at the same time, that strong move down, I want to be a buyer, but I have to respect too. I have to respect the sellers. Whenever we find ourselves in a situation like this, and you probably know this already if you're taking my free trading classes or if you're a student of mine in our trade room, you know I want to be a buyer, but I have to respect the sellers. In these situations, there's one trade that comes, well, there's actually two trades that come to mind. One is a bear trap, and the other is a double bottom reversal. Now, a bear trap, my favorite trade going back up into that trading range. Remember, a lot of momentum for the bears, anticipating these bears are going to try to run this lower. Let them try once, let them try twice, then we have them locked in. Then we know where their stops are, and I can use their stops to fuel this reversal back up into that range. I'm going to use a bear trap on this one, or I'd like to use a bear trap on this one. I teach this right in the free trading course. Bears once, bears twice, right, and that bear trap underneath. Now, keep in mind, if this was to pop and go higher, it's the same basic idea, right? Now, notice how I draw this. It's a strong move up. It's a higher high in price. And as we always say in the trade room, it's a trap, baby, right below that low. Now, again, we're anticipating that market to roll over, okay? We're trying to protect ourselves against those bears, trying a couple times there and using bear traps to buy the reversal going higher. Another easy way to buy this is with a double bottom reversal. Again, all that momentum going lower. Imagine now we run up, and again, with all that momentum, they're going to try to run this thing back down to retest the low. If they retest the low now what happens is all the bigger lot sellers, all the professionals who sold high, they begin taking their profit where? At least a good chunk of it off at that low. Now, who do you think would sell down here? Not professionals, right? Rookies. Rookies will sell into those lows here. This is where I call this a double bottom reversal. In my free trading course, it's called a 2-try failure at a double bottom. Let those bears try once. let them try twice. We don't need the trap this time because now they've already finished their objective, as we say, right? Remember, you want that bear trap ahead of the objective because you're trying to protect yourself against a retest of that low. Once they retest that low now, the rookies now get in, let them try a couple times, and think about this kind of key pattern here. Run the stops. Remember, my favorite way to trade is to trap traders in on the wrong side and use stops as fuel. Think about stops. This will be your failure pattern. It'll be a 2-try failure because, again, that momentum is so strong off the high. Think about that failure pattern, and then as we go higher, think about that bear trap entry on the rotation back up. 2 ways to make money as we, well, actually 3 ways to make money, but 2 basic patterns here to make money off of that low. It's a 2-try failure. Again, and then as we go up, strong move, higher high in price, and that trap. Remember, I cover both of these, the failures and the trap setups, in our free trading course. If you have not taken that free class yet, you've got to learn these setups. If you're not making consistent money right now, these markets are way too good. I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will teach you a stupidly simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. Most importantly, though, in that free video course, you'll learn my 4 favorite entry patterns to help start making money each day on your own. If you're tired of missing the best trades right now, click that link, grab that free trading course. It'll give you an easy roadmap to follow. You're going to love it. And if you can't grab that link that popped up there, I'll put all the information, I'll put all the important links down in the description of the video, just in case you can't grab that pop-up there for some reason. Now, here's a very important question now. What if we keep going lower? I mean, again, I mentioned earlier on the 60-minute time frame, it shouldn't surprise anybody if this thing rips lower and takes out that low. How would I do it at that point? Well, you can't sell down here. It's very difficult to want to short this thing into so many support levels when, again, it's overall bullish into a trading range. How would you buy it if we continue to go lower? The same exact way. It's almost the exact same game plan. So if we end up ripping lower here overnight, I'm still at support levels in an overall bull market. I still have a lot of bearish momentum. That is our big problem at that point. But think about it, right? We have this big range up overhead. You've got to think buyers are waiting underneath all of these prior swings right now. Now, the hard part will be, of course, timing the entry. That'll be the hard part. So we end up rolling lower here. Remember, if it runs lower, anticipate that retest of that low. We're overall bullish. I'm going to keep on looking for that long side trade off that low. Remember what it looked like before? Remember, trap those bears in. Let them try once, let them try twice, and get in off that bear trap. The bear trap is necessary because as you go higher, you got to worry about that roll back over and take out that low. I want to be in the money on that trade by the time we get higher and potentially roll over. If they do roll over and take out that low, again, it's safe to assume professionals are already short. They're taking their profit, if not all their profit, a big piece of their position off at that low. In come the rookies, let them get stuck in. Remember, I'm not a big fan of picking bottoms, as you can tell, right? I'm not a big fan of let's buy that bottom, because for all I know, it'll keep on going, right? You might make a little bit less money on the trade, but the odds of success are so much better if you wait for evidence of exhaustion, of commitment from the sellers. Once those bears try a couple times, again, think about where their pain is, right? Think about where those sellers get forced to become buyers. And oftentimes, this thing will rip and run higher. And when it does, don't chase after it. Look for that, what was it again? Strong move, higher high in price, and go looking for those traps. Again, we're going to use this trading range overhead as the magnet. All right. So even if we do keep going lower, you can see here on the 60-minute time frame, even if we keep going lower, all of these prior swings here, they all make sense to be areas for bear traps back up into that trading range. If everything falls apart and the market collapses and runs down, that unfortunately looked too much for tonight's video. We'll be trading together tomorrow morning though in our trade room, and we'll cover that if everything falls apart. It's unlikely right now, but again, I mean, the CPI report is such a big variable for tomorrow. There's no way to really predict what will happen here if it all kind of falls apart here. But again, we'll be together tomorrow morning in our trade room. Now, one more question, right? One more question. Let's say we get the bottom here now. What do we do as we go higher, right? What's the game plan? Can I buy it on the way higher? Can I sell it off the high up here, right? Because, I mean, this thing could make a big rip. It could make a rotation all the way back up, take out some of these big highs up here. How do we buy it as it goes higher? How do we sell it off the high? Let's talk about that because, again, I want to make sure you guys are ready for anything this market throws at us. We might see quite a bit of volatility here for tomorrow. Let's go grab the NASDAQ now, right? The NASDAQ it's very similar here to the S&P in the sense that you could easily argue the NASDAQ is even more bullish or bullisher than the S&P. Again, overall bull move into a trading range. That range acts like a magnet. We talked about this last night as well. We're all waiting now for that run, right? Back up into that range, take out some range highs. And as I mentioned in last night's video, whenever the market grinds up like this, we have to think we're trying to get underneath, right, one of these prior swings. So again, we're in a great spot right now. We're sitting right on Sunday night's low, right on Monday's low, whatever you want to call it. Perfect spot to tee this up for a nice bullish reversal up into that range overhead. But again, want to make sure, like in the S&P, all of these levels below are going to be very attractive areas here for the buyers, and that same game plan I mentioned on the S&P can pretty much be applied to the NASDAQ. Over on the NASDAQ tick chart, this is a 4,000 tick chart, you'll notice in the upper left-hand corner there, we ultimately have the same three components. You could easily say this one looks a little more bearish on the tick chart here tonight. It's still a bullish market into a trading range. We've now got that rotation off the high. Remember, markets, range-bound markets, they love to rotate back and forth. So we're at support underneath the trading range. We are 1, 2, 3 legs down off the high today. There wasn't much of a range today on the NASDAQ. It pretty much trended lower. If you're taking my free trading course, we talk a lot about measured moves or symmetry like this. And what do we talk about? We talk about how most trends go in threes. 1 leg down, 2 leg down, 3 leg down. So again, very nice location to assume buyers are waiting right underneath Monday's low. And again, these are not going to happen every week. Monday's low is not going to be a big deal every week, but when Sunday night rips higher, and by the time we all wake up on Monday morning, the price is way up here, it makes perfect sense that if we can get back below Monday evening or Sunday night's low, you got to think buyers are going to love this. It's a bargain price, right? So you got to think this is an area where buyers are going to be interested. The only challenge, of course, is this bearish market, right? This bearish momentum. So just like on the S&P, in fact, even more important on the NASDAQ, you'll notice that trend line coming down. This trend line is a big problem, right? Because what? It's resistance. So as the market goes higher here, do you think there might be some bears who are trying to short? Yeah, of course they're going to be, right? Of course there will be. There's a lot of momentum now for the bears. This is even more important right now. I need to buy as low as I possibly can right now. And you guys know this if you're taking my free trading classes. The best entry pattern to buy nice and low is a bear trap, right? Again, higher high in price and trap low. We may also see it get above, right, and begin going and look for that trap below a low right there. Remember, so keep an eye on those traps as we go. Same exact game plan, right? Same exact game plan going lower as well on the NASDAQ as the S&P. So not a lot different there between the NASDAQ and the S&P. In fact, you could argue the bear trap down here is even more important here on the NASDAQ. Now, I mentioned earlier, how do we trade as we go higher here, right? We know how to buy it as it goes lower, right? We know that game plan. What you want to think about now is we call a pop and grind. If this thing turns around either here or goes lower and turns around, there's a very good chance we end up popping up. And because ranges love to rotate back and forth like this, the market can move very quickly. It can move very quickly back to those highs here. Whenever we get these ranges, you want to think about what I call a pop and grind channel. Okay, what'll happen is it'll pop up, and all of a sudden, all the sellers who were so eagerly shorting before, they walk away. The market begins to flutter higher. Anytime you see a market flutter higher like that, it usually means, or grind higher like that, it pretty much tells us that the opposite side of the market's walking away, right? The market's now squeezing. When that happens, it's very simple. I'm going to draw a trend line off these highs. I'm going to pin that trend line off that low. And then what do we always say? Look left, find some prior swings, and you want to grab whichever entry pattern you can find off of that low. Now, I love traps, right? I love traps below prior swings, but in all reality, as the 21 moving average comes up, you'll get below that 21 EMA. If I see bears coming in and trying to short below that 21 EMA, I can use their stops as fuel. And in the free trading course, these are called the price action cycle, right? So trap, failure, pullback, strength move. I'm not going to go into all the details right now. You guys are learning these in the free trading course, but there are potentially 3, if not 4 different entry patterns off the low of it, right? Trap's my favorite. Failure patterns are on the moving average. Pullback patterns on the way above the moving average, and then strength trades as we go higher. At this point, we already know where the market wants to go. It wants to take out that high. That's a pretty easy one. Also, too, the amount we go below the range is the amount we go above the range, and that will give us an easy roadmap as far as to squeeze the most profit out of that trade. You know, I'm always talking about in our video classes, if you want to make more money, don't trade more often, don't trade more markets or more setups, get better at holding your winners longer. And by knowing how ranges work with pendulum swings and rotation back and forth, that'll make it easier for you to stay patient, leave a piece of the position to run. And I'll tell you, on a day like tomorrow with CPI, I'll be trying to leave an open position and see how far it'll run there to get a big runner there for tomorrow. This is called a pop and grind. It's called pop and grind, right? So again, it's a bear trap. It's a bear trap off the low, but watch it case it, right? It may, who knows, right? It may just rip off that low here, pop up, grind. And again, we find those channels like that, right? And look for that, bam, right off the low of that channel. Now, let's say we wind up all the way back to that high. We are still a range now, right? Yeah, nothing changed. We're still a range. We're still anticipating that rotation back and forth. How could I sell up here? How would I sell up here? Well, what's the problem? The problem is not location. It's a great location to sell short, right? But resistance, range below us, yeah, you nailed it. The problem is momentum. Momentum's the problem. There's a lot of momentum there for the buyers. And remember, we are not a bear market overall, right? On the 60-minute time frame, there's that trading range, right? It's a very strong overall, well, I shouldn't say very strong, but it's an overall bullish market on the 60-minute. So if I want to sell off the high here right now, it's not going to be as easy as picking a top and simply shorting that top. Because remember, anytime we see a strong move higher like this, we anticipate what? A pullback and a retest of that high. There are 2 patterns you want to look for to short off the high here. One is what I call a crown reversal pattern. In the free trading course, we talk about failure patterns and trap patterns. It's almost identical. Well, it is identical. We talk about buying off the low. I want to trap those buyers in. Let those buyers try to run this market higher. We have something called the 2-try rule in our video course. Buyers will try twice to keep it going. As we go up, buyers will try once and try twice. When they fail, they'll roll over and turn around. It's called the 2-try rule. We expect those buyers here to try once, twice to continue that move going higher. If I can get those buyers after trying once on the pullback to the moving average, trying twice to go higher. This we call a crown reversal pattern. This is a very important pattern to understand. Remember, buyers want to buy low, so as they try once, we go to a lower low, they try twice, and you have to remember, in an overall bull market, as the market goes lower, who's waiting down there? Buyers are. This could easily be a new channel off the high, off the low. This could easily be a what? A bear trap off a hidden channel, a breakout pullback off of that trading range. The moral of the story is, because of the threat of those buyers waiting at a lower price, we have to get that trap. That's why traps are so valuable when you're trying to turn the market around. I hope this makes sense, because once you learn to use momentum is a big variable. When momentum is very strong like this, we're trying to pick a top like that, we have to first make sure we trap in the buyers, because I'm going to need their stops to fuel this move. We need stops to fuel that reversal, because we have the momentum. Momentum is all bullish in that example, right? And again, because we anticipate the potential for a bear trap waiting down there, I have to make sure I'm getting in as high as I can. That way, if I'm right about it, it'll be gravy, right? But if I'm wrong about it, at least I'm in the money on that trade by the time I get my face ripped off, right? Well, it isn't going to happen that way, right? My stop will be moved down to point of entry. It becomes more of a small winner instead of a bear trap loss. Hopefully that makes sense, right? So when you're trying to call the top like that, it requires that crown reversal. And again, it's one try, two try, lower low, trap high. All right, that's why crown reversals are so valuable in strong rotation scenarios. Now, at the same time, if they run this thing higher, if they pull back and they retest that high, professionals are buying low. They'll take their profit at the high. Remember this earlier? Remember that double, it was a double bottom reversal earlier. It's the same exact idea though. In come the rookies, let them try a couple times. And now we don't need to be as careful on this one, because the buyers are already in. The buyers have already spent their bullets. At this point, those buyers who bought low, they're getting out now. Again, it should be a good chunk of the position coming out at that high. The rookies come in. We can use their stops as fuel. And as we roll back down, remember, we talked about this last night, right? It's failures around the edges and traps as we rotate. Failures around the edges, traps as we rotate. A double top. Trap in those rookies, use those stops as fuel with our two-try failure, and then again, hit that trap, right? Oftentimes, there'll be a channel coming down off these lows, up around these highs. There are quite a few examples of that sequence in our free trading course. I get a lot of emails from you guys every week about those as well, so hopefully that makes sense. And again, we're trying to rotate this thing back and forth, right, to take out that low as it rotates back and forth here. And again, if it was to pump up and grind and grind and grind like that, you know how to do it, right? Find that high, mark that low, right? Find those prior swings, right? And grab that first test off of that low. Targets off to retest the high, leave that runner up to levels we have marked up on the 60-minute time frame. All right, guys? So now we know how to sell this thing, right? Now we know how to short this thing off the high. The only other kind of variable would be if we found our way up to the high and then got crushed right back down in. Sometimes you get that pop and grind in both directions. So it pops up and then it pops right back down and grinds down like that. You know what I mean? Again, it'll try to rotate back and forth like that. Doesn't seem as likely for that right now, because if it's coming off that low, it'll be a lot of momentum. So not as likely in a bull market overall. In a bear market, for sure, right? Because you'd expect bears waiting above those highs here. In a bull market, not as likely. But if for some reason we were to see that strong reaction off that high, if we don't get that 1-2 crown reversal off the high, or they don't pull back and retest that high, if it simply V-tops, right, and starts grinding down, you know this now, right? That grinder is easy. Draw the trend line off the lows, bring it up around that high, mark those swings, and you want that first test, ideally around one of those swings here for a trap or a failure, a pullback combo off that high. All right, guys? Trade the rotation. Trade the rotation and understand how momentum is the variable that tells you the best entry tactic. Okay, that's what keeps you out of trouble. Once you understand market structure, like ranges, and you understand momentum. Momentum is that kind of it's that more advanced aspect that tells you how aggressive or how conservative you got to be on the entry. We'll cover more of this tomorrow morning in our trade room, but now you know more of the game plan for tomorrow. Now it's all a matter of time. Now we wait and see what the CPI report comes up tomorrow. You know they're going to throw some curveballs. You know there'll be something that will surprise us tomorrow, but that's all good. Tomorrow morning, 8 o'clock Eastern time, of a front row seat for the CPI report in our morning's trade room. I would love to have you there learning this stuff and trading along with us. I'll put all the important links, the free course links, the trade room membership links. I'll put all the details in the description of the video. So grab those. And if you have any questions or if you have trouble getting access to any of the stuff we talked about tonight, please don't be afraid to call the office or use live chat. You know, Megan and I are always here to help out. So if you got questions about brokers or data feeds or membership or whatever, right? Don't be afraid to call, email, or use live chat. All right, guys, wrapping up here for tonight. Excellent week so far. We'll get some more winners to find tomorrow. Hopefully, I'll see you tomorrow morning at the opening bell in our members trade room, 8 o'clock Eastern time. If not, we're going to come back tomorrow night and trade Thursday's reaction day to CPI on Wednesday. It's going to be a great rest of the week. Buckle up, kids. And my goodness, what happened to Aaron Rodgers last night? What? Oh my God. I literally turned the TV on. The guy's already injured. It's not fun getting old, is it? It's not fun getting old. Anyways, enough of the video tonight. Have a great rest of your evening. Get some rest. I'll see you tomorrow. If not, same time, same place tomorrow night. Be well. Be nice to each other. Stay safe out there. Aaron, hope you get well soon, buddy. Adios, amigos. Bye-bye for now.